news for Wednesday, June 15th, 2022. Breaking news: OPEC production is falling. In a stunning sign that the energy crisis is only getting worse, OPEC has seen declining production from April to May. This is in the face of all-time high gasoline prices. This is also while prices for crude are well over $100 per barrel for the entire time period and touching over $120. Despite what some mainstream economists tell you, lower production in the face of skyrocketing prices clearly portends to one thing: there is a supply problem. And in oil's case, there is no alternative source in which to draw from. Barring the intervention of some major and surprising technological development happening almost immediately, the days of increasing production are over. The days of cheap oil are over. Here are the numbers. OPEC produced a total of 25.5 million barrels per day. That is down 176,000 barrels a day from April. Almost every country was down. Equatorial Guinea, 2,000 barrels per day down. Venezuela, 2,000 barrels per day down. Iran, 20,000 barrels. Iraq, 21,000 barrels. Gabon, 32,000 barrels. Nigeria, 45,000 barrels. And most notably, Libya, down 186,000 barrels per day. And of course, this is about to get a lot worse for next month, as that number for Libya's losses could easily go up fivefold, as reported yesterday. The only bright spot in the report was the UAE, Kuwait, and Saudi Arabia, which did see some increase in production, but not enough to offset all losses. And if Libya stays offline and everything else stays equal, some back-of-the-napkin math would bring us to conclude we can expect supply to drop by over 1.1 million barrels per day. Some practical saving tips might be to go out and buy a gas can and fill it up. While you're going broke, Russia is making bank. The publication energyandcleanair.org released a report this week stating that Russia had made over $100 billion over the last 3 months since the invasion of Ukraine in fossil fuel profits. In fact, revenues from fossil fuels went up in March, a month after the invasion. What has in essence happened is that the embargo has not stopped the flow of Russian oil. It has simply rerouted it. And while the embargo lowered the price of Russian oil relative to benchmarks such as WTI has skyrocketed so high that Russia is basically still selling oil at the same or higher prices than they did before the war started. India became a significant importer of Russian crude oil, buying 18% of the country's exports. And interestingly, a significant share of that crude is refined in India and then re-exported to other countries, including to the US, France, and other countries that are usually considered part of the Western Bloc. Altogether, Russia's average export prices were 60% higher than last year, even if they were discounted from international prices. So in other words, even though their prices are discounted by international prices, they are still higher than they were last year. Poland and the United States made the largest dents in Russia's revenue. Lithuania, Finland, and Estonia achieved sharp percentage reductions of more than 50%. While India, China, Iran, and even Saudi Arabia have increased imports of Russian oil. Since it is clear that Russian oil is still making it to market and making it to market at discounted prices, one has to wonder whether the argument that the embargo or the invasion of Ukraine is really what is putting the bulk of upward pressure on oil prices. In some respects, it might even be deflationary. For example, it has allowed India to diminish its demand for Saudi Arabian oil, which creates less buyer competition for that particular product for countries still wanting to purchase it, like the United States. Anyway, who knows? But it does appear that the embargo is a complete backfire for the Biden administration, for Russia is making more money than ever. Meanwhile, inflation runs rampant in the US. If the inflation is because of the embargo, Biden has managed to hurt his populace and help his opponent. In our third story, China goes deep. China is claiming that they have set not one, but 2 world records in deep-sea energy exploration. Purportedly, China National Petroleum, CNP, used domestically developed technology to directionally drill under the seabed at a record depth. This is part of a larger pattern of the Chinese oil companies beginning to aggressively invest in fossil fuel drilling and exploration, PetroChina, Sinopec, and CNOOC, China's three largest oil companies, expect to raise their 2022 capital expenditures by 4.6% year over year to at least $79 billion. PetroChina and Sinopec will have the second and third largest oil investments for any oil company, behind only Aramco, the Saudi oil giant. Remember, the idea of peak oil is not that we're out of oil, it's that we're out of cheap and easily accessible oil. And when people are doing this, when they are drilling sideways under the ocean, that's a pretty good indication that we are past peak. Thanks for watching. We'll see you tomorrow.